All right, so let's jump into it today. We're going to be talking about how banks are putting on the pressure for clarity. They also have some new friends that we'll talk about and get into all of that. We'll have a special guest for you. Before we start, though, I do want to thank our sponsor, and that is Tangem, where you guys can get into self-custody. Maybe it's for your first time. We have a lot of new viewers coming over to the channel, so if you've never done self-custody or tried it, this is the way to do it. So first go over to tangem.com, get in on the 3-card set is what you want. That way you've always got that extra. Very easy to set up. One of the most secure platforms out there in terms of building a self-custody model. So all you have to do, hit our link down below. It's going to give you a little bit of a discount, and the discount stacks on top of the current discounts available. So use the code, and it does help the channel. Let's go to, before I bring on Zach Pandl, I want to go to a clip real quick. And this will explain a little bit more around where the ABA is and why they're panicking. Take a look.
To be sure, we think there are opportunities to strengthen this bill further, and I think you'll continue to see advocacy from us. But yeah, it's come a long way.
So just to push on that a little more, Brooke, did banks get what they wanted, or is this compromise vague enough that Coinbase could find a way around it just within a few months? Coinbase, for example.
Sure. So unfortunately, I think it is a little too vague at this point.
But if tokenized deposits are so compelling, it seems still like every bank is launching a stablecoin strategy rather than a tokenized deposit product. Is the banking industry building the thing it says it wants?
The banking industry understands those strengths and is very eager to implement them and to better meet our customers' needs.
Brooke, I want to switch gears, just 30 seconds left here. The Fed recently granted Kraken a limited purpose master account. It's the first crypto firm to get one. You've called it, quote, putting the cart so far ahead that the horse will never catch up. What are you specifically worried about?
Access to the payment system is a very important privilege.
All right, so I think the clarity issue is that innovation is what they're worried about, because being able to stay up with innovation, especially as it starts to grow so quickly, is the issue. So I wanted to bring on Zach Pandl, who comes in from Grayscale. Has been with us before. How are you, Zach?
I'm great, Paul. Great to see you. Great to be back on the program.
Hey, Zach, we've been covering a few things that continue to kind of push against clarity. We had a video we did not too long ago, Elizabeth Warren going at it. Her, of course, attack has been through the OCC, going after these banking charters. Why do you think that the banks have not just finally said, hey, listen, we're going to be able to innovate. We're going to be able to build new products. We're going to be able to keep our customers with all this great new product. Why do you think they haven't done that yet?
Well, look, I think they're not ready to lay down their arms at this late stage here. And I think the resistance to clarity reflects how important this piece of legislation can be and what it means for the digital assets industry. You know, this is going to unlock tokenization. This is going to unlock decentralized finance, allow institutional capital to be building on all of these blockchains. It's a hugely important thing for the crypto industry. I think the banks get that. You know, they don't necessarily want that competition. They'd like to keep control over these parts of the financial system. Clarity is going to bring in new competition and bring benefits to users, to asset issuers, to bring efficiency to the financial system. That's why we want it. And I think that's why it's going to happen. Ultimately, this is the right set of policies for the United States financial system. And I think we're going to see a bipartisan vote to get this piece of legislation over the line.
All right. So you have the banks clearly in opposition here of almost everything when it comes to clarity. And an interesting participant that we've talked about before is the DTCC. I want to play a clip for you because their CEO sounds like he's doing a little bit of the Italian Goodfellas plan. Take a look.
Let's be a little honest with each other. There's some hype around this. When the early conversations on blockchain focused on disintermediation, this thinking was premature at best, and I'm being very polite about how I say it. DTCC will serve as the connector and common ledger for the financial system. The digital highway begins with us. That's a fact. We will safeguard liquidity from fragmentation. And I cannot stress that enough. We have got to keep an eye to make sure assets are not disaggregated. And I firmly believe that we as an industry have got to stay focused on that. And we feel very strongly about that, and DTCC is going to do everything it can to make sure that the industry does not fragment. That is not good for anybody. DTCC will be operating 24/5 and is the center of gravity for blockchain innovation and digital asset adoption. Financial institutions need to take action right now if they want to participate in this journey. So here are some of the questions we're discussing. Which wallets and L1 networks do you want to use? And are you prepared when our tokenization service launches in October? Which blockchain use cases are most important to your organization? But no matter what, keep in mind, DTCC will be your strategic partner.
All right, so kind of throwing down the gauntlet here in terms of how they envision this working when you look at tokenization and the use of many of these L1s out there. Do you think that the DTCC is in a position right now to kind of dictate these terms out to the industry? Because it feels to me like this is still a very open opportunity for many different companies.
You know, Paul, that is a fascinating clip. I think that the DTCC and other institutions at the center of the financial system are in a position to help shape this over the short run. I do think that the financial system is not totally ready to move to full decentralization, and some of these institutions will help shape the short-run outcome. But also in that same clip, you see the limits of what the current model offers. The DTCC will operate, he said, 24/5. Leaving 2/7 of the week for other systems to operate and help provide liquidity for the financial system. So over time, we are going to move to open architecture blockchains like Ethereum, like Solana, and to the vision of decentralized finance. And I believe that we will ultimately significantly disintermediate certain institutional players, potentially including parts of the custody ecosystem. But over the short run, the DTCC has a certain important role to play. And I think these institution-centric blockchain frameworks, things like Canton that the DTCC is partnering with, have some runway over the short run as a first step towards our tokenized future.
In the beginning, there was also, what was it? Alta Vista. Yeah, in the beginning. There was Alta Vista. Does anybody get that joke? Do you know what I'm talking about?
Look, I think that's a good metaphor, Paul. That when you saw the internet build out, there were things that helped shape the onboarding of people, online platforms, and things that helped with that process. And ultimately, we moved away from that to a more open architecture system. My thesis on blockchains will be similar to that.
All right. Well, cool. Here's a clip, though, Zach, where they actually go, it feels like they're going directly at DeFi. Take a look.
For example, people often talk about decentralized finance or DeFi. Our view is if you are performing functions that are akin to acting as a broker-dealer or another regulated intermediary, venue creation or order routing, the non-custodial wallet providers, DeFi user interfaces and automated market makers, you should be required to register. You need to go through a proper process that's broadly consultative, not through an ad hoc, no action or exemptive relief process. That should be narrowly defined, time-bound, has some guardrails around the customers that can access it, at least in the initial phases, and transaction volume to avoid price and liquidity fragmentation around the markets.
So what they're simply saying is DeFi, no good. We're basically trying to kill it. That itself is a bad thing. I want to back this up with one more clip, then I'll get your comments on this. This is Hester Peirce kind of talking about this very issue. She was actually kind of harassed a little bit by the DTCC in reference to this. Take a look.
As you mentioned, I think we submitted maybe a dozen letters now at this point to the crypto task force that she leads. And every time we submitted a letter, she came back with more questions and we had to submit another letter.
And I think your letters always come back to, well, there's someone behind that software and we need to put a regulatory thumb on that someone.
Whether it's the person developing the software or the entity where that person is, there is somebody who's accountable. So I think that's also sort of a foundational principle.
That may be something that you and I don't see exactly the same way. But if Mary and Joe decide they want to do a peer-to-peer transaction, that's a decision that they're making, and we shouldn't stand in the way of people doing what they want to do unless we have a good reason to do that. And I don't think there's any reason that there shouldn't be peer-to-peer trading, but I think most of it is going to be involving some kind of intermediary, and then it's just figuring out how we've got to attach the regulation.
Hester's always so nice in basically saying, shut the F up. You don't know what you're talking about. What do you think is, especially we've got the crypto task force leader right there taking a look at this and saying, hey, listen, this is going to happen. It's really two different people trading out here. It has nothing to do with the software side of it, which is exactly where DeFi is heading. Would you agree on her position, or do you kind of side with the DTCC here?
Look, I think Hester Peirce is exactly right on this topic. And our view, and I think the right view, is let's let the users decide. Yeah. If decentralized finance platforms are going to lead to lower liquidity, then users are not going to use them. If they're not going to have the effective price discovery, then traders are not going to use these platforms. And so if they are kind of weak platforms and not as effective as centralized exchanges, then there's nothing for these players to worry about. The reason that they are concerned is that these are effective ways to intermediate savings and investment in the financial system and create new efficiencies and create new benefits for users. That's why they're going to be broadly adopted. And that's why we need a clear regulatory framework around them. That's exactly what we are getting. I think these are somewhat last-ditch efforts to prevent the legislation from getting over the line. I don't think they're going to get the job done, and then we are going to get this comprehensive regulatory framework for DeFi and other parts of the industry.
Yeah, I mean, we were watching a little bit of a spat between Canton and Sui over the weekend on X, and you had Yuval in there kind of hitting because they were talking about market making, and they were pointing directly at Sui, and of course, Adeniyi came back and said, "Hey, we're not doing any of this. We've worked basically Sui has zero VC allocation still vesting," which is kind of the reference. And of course, Canton highly partnered with the DTCC here. There might be a little bit of turf battle clearly setting up here in the world of DeFi, especially as we start to see tokenization and really Main Street and Wall Street kind of converging at the same time. So intriguing stuff to watch for sure. I want to leap over to Ethereum a little bit. You guys put out the statement here, and this was in reference to the staking model that needs an update. Tell me a little bit about where you think this is heading and why it needs the update in terms of the supply cut.
Absolutely. And I'll say at the outset, this is a somewhat wonky topic. So just to try to get the key things across. Look, Ethereum should be scarce. These are assets that are commodities, and they're valued when they're in high demand and when they're scarce, demand and supply, just like other commodities. And I would like to see Ethereum have maximum scarcity or as little possible supply. And so by changing the staking model, we can reduce inflation on the Ethereum network and increase its scarcity. We think that that'll increase the value of the asset Ether over time. Now, there's other dimensions to this story and things that are motivating it. We want to avoid concentration and tail risks among staking service providers. We want to account for the fact that the burn mechanism on the Ethereum blockchain is not quite as intense as it once was in the past. These are the things that are motivating this discussion. But the key thing to get across is that scarcity means more value for the token. And these changes would bring greater scarcity to Ether.
All right, so scarcity versus yields really is what you're talking about here. Institutional loves
Correct.
Yields, and that's one of the reasons we've seen so much activity in ETH in general. Do you think that is a long-term view for ETH, more of a scarcity play versus the opportunity to go in the direction of just higher performing yields to traditional markets? I mean, if you look at a money market and kind of compare that, yields matter the most. What's your opinion on that?
I think that framing versus money markets is a great way to think about it. The key difference is that a money market has a $1 value and it holds that value. Ethereum may pay 3% as staking reward, but is an asset that has 60 to 70% annualized volatility. So it's mostly the price changes that drive your returns. Ethereum's staking reward rate at 3% today, for example, is about 1 day's price volatility. So it's a pretty small amount of yield compared to the price returns. I think absolutely Ethereum should steer in the direction of being a maximally scarce asset, more along like the lines of Bitcoin. And there will be yield opportunities on chain through liquidity provision, from lending platforms, through stable coins and tokenized assets. There'll be different ways to provide yield on chain. But for Ethereum, the asset, I think you want a platform that is neutral, that is censorship resistant, and that has a scarce token. That's what our view is, that these changes are warranted today.
What about ETH rewards versus if we get rate hikes?
Rate hikes challenge the value of every asset because they sort of raise the hurdle rate for everything in the economy, whether it's a money market fund or it's an equity or a bond or a crypto asset. So higher rates are generally going to be a headwind for several different parts of the crypto ecosystem. Now, they will be a tailwind to certain things, especially stablecoin issuers. So a business like Circle or Tether, they make more money when rates go up. We estimate that Circle makes about $190 million more per year for every 25 basis points that the Fed funds rate or the Fed's interest rate is higher for the year. So you'll see some things will face a headwind from higher rates. I think Ethereum, Bitcoin, they will be held back partly by higher rates, and other parts of the crypto ecosystem will receive a tailwind, especially stablecoin issuers.
Do you think that is going to occur?
I think that the Fed is probably on hold for the time being. I think probably rate cuts are off the table right now because inflation is just too high. And rate hikes, I think, are still relatively unlikely because most of the inflation is coming through oil prices and gasoline prices as a result of the Iran conflict, and that's something that could reverse relatively quickly. So I think the right approach, and probably what we're going to see from the Federal Reserve, is just to stand pat for now, watch how this plays out, and then make a clearer decision later in the year. My guess is rate cuts slightly more likely than rate hikes.
Okay. Let's jump over to Solana real quick. I'm looking here at what Mert's talking about. It says, he's kind of talking about right here. Good morning to everyone who voted against reducing Solana issuance to collect rent. And then you look at another tweet he had right here. The ETH guys didn't execute it well, but the idea was right. Anything not seen as money has a fundamental ceiling on valuation. So you look at that and you kind of see where Solana is heading. Do you agree with this, first of all, of how issuance is being kind of proposed out to the communities here as a potential reduction? What are your thoughts?
I would encourage people to think about this topic like traditional commodities. So you have gold, you have silver, you have copper. These are all assets that have different amounts of functional use as commodities and maybe different amounts of monetary or store of value premium on top of that. And they're all a little bit different. I think Bitcoin, Ethereum, Solana, they're all a little bit different in that regard. Bitcoin does not have all that much functional utility in the context of its network, but it has a lot of store of value properties. Solana has a lot of functional utility. Solana has millions of users and thousands of transactions per second, so maybe it's more like copper. Not quite as scarce as gold, but a commodity that can have lots of value in the context of tokenization and decentralized finance growing. So these are different assets taking different approaches. In general, I think the rising tide is going to lift all these boats. All of these leading assets in crypto are going to benefit from regulatory clarity over the coming years, including both Ethereum and Solana and several others.
Staying on Solana, I got to look at the perp activity because perps volume continues to explode right here. When you look at Solana and the perps possibility here in terms of a market, what do you see right now, Zach? Do you think this is going to be the beginning of something really, really big and they start to basically take away from what has been, really kind of controlled by other chains? What are your thoughts?
Look, I think the perps story is being, run away with by Hyperliquid at the moment, clearly dominating that story among decentralized projects. But Solana is different. Solana is a very diverse ecosystem with all kinds of things going on: perpetual futures, real world assets, stable coins, decentralized physical infrastructure, something I think is very interesting and where Solana also dominates, meme coins, NFTs. It's a huge ecosystem, a big tent with so many different types of users. I think that that's Solana's strength. It's a diverse platform, all happening on a single layer one that's very cheap, very fast, great architecture and great infrastructure like wallets and dexes. I think Solana is in a great position, even if some other chains are gaining some traction in narrow use cases like perpetual futures.
Well, and let's kind of compare this, because I've got a clip here of Solana, and it's really kind of the Solana Jupiter concept here and why it's exploding. Jupe has continued to make a lot of advancements on this, but I want to get your opinion on this clip. Take a look.
Perp dexes have been growing like crazy to all-time high. New all-time high on Solana RWAs, 2.8 billion, growing over 12x. My favorite part of this, though, 98% of all tokenized equity spot trading is happening where? It's happening on Solana, obviously. But the next step, where things start to get really interesting, is a partnership that we've entered into at Jupiter with Securitize and Jump Trading. Massive deal. My hunch, over the next 6 to 12 months, tokenized equities is going to be one of the biggest talking points on Bloomberg, CNBC, and everywhere else. It's Jupiter at the lead of the pack there. The biggest news across crypto, Bitwise, they have more assets under management than all of the TVL on Solana. But the market with Athena, JupiterLend, and Bitwise live right now raced up $500 million in a week.
Yeah, I wonder what happened.
How'd that work? Not bad.
This is like our biggest win so far. It's doing great. Couldn't be happier.
If you're watching this, we need more USDG. It's been fully maxed out. It's all vacuumed up. So please, if you're watching this and you have USDG, go deposit.
Clearly, they're pumping their own bag there. You know, that's cash with Jupiter. But the point he's getting at, I think, is valid, and that is there's fast growth. There's an opportunity here that I think this market will continue to push on. So it's going to be interesting. I think we've got a battle underway when it comes to the perps market for sure. Who would you say at what's happening right now on Jupiter versus what's going on with Hyperliquid, who would you say wins this in 12 months?
My view in 12 months is that Hyperliquid is the perps winner and Solana is a tokenized equities and stablecoin payments winner. I think they're both a little bit different, optimized for different things. I think there's room absolutely for both assets in institutional investor portfolios, and that's generally the recommendation that we make. Both huge use cases. I think each chain has a different set of edges. I give Hyperliquid the edge on perps. I think Solana has a lot going for it on tokenized equities and stablecoin payments. Those are the things I'm most excited about in the Sol ecosystem.
All right, Zach, you're very political there. I love when you answer like that. So I'm going to go and take you into the lightning round so we can get some hard answers going. And that is the Iran war pauses, clarity, progress, and kills it. What do you think? Yes, no? Basically, the Iranian war pauses, clarity, progress, and it's over.
I think that clarity is going to pass.
Okay, all right, so you say no. Not going to happen. I'm kind of with you. I think it's going to go through. Let's get into this. Robinhood will happily migrate everything to DTCC's chain, or do you think they'll stay home with their new chain, the Robinhood chain?
I think they stay DeFi and they continue to build on their own chain.
I'm with you on that one. Solana, JupeNet, Phoenix, I think you answered this earlier, and Jito, JTX, eat away at Hyperliquid market in the next 12. Now, that would be all four of those, so versus the one. Do you think that would be the case?
Look, I'm going to say no. I think Hyperliquid does have great game in the perps industry, and I think Hyperliquid will increasingly compete with traditional futures exchanges like the CME. I think that's the angle that ecosystem will go.
Wow, if you're there, I'm going to go ahead. I'm going to go opposite. I think they do eat away at Hyperliquid. But I think Hyperliquid have obviously done something I think many people are trying to figure out. Are they the early mover? Because remember, first movers often win how these markets shake out, and Hyperliquid has been in a good spot for sure. So you might be right. We're going to go back and look at that one in about a year and see who was right. Privacy chains don't matter unless there's users.
Well, nothing matters unless there's a user, so I have to agree with that. But I think privacy chains absolutely matter. Zcash, a very important asset for Team Grayscale, and something that I think has lots of further upside here.
Yeah, let's go into this one. Bigger threat to crypto right now, banks or DTCC and Citadel?
Look, I think let's say banks. Although I'm going to say that all of these entities are going to get on the crypto bandwagon pretty soon.
I'm going to go the opposite, but I do agree with you. I think eventually they finally succumb to the pressure, and I think eventually these markets. The question is how well do they migrate into the new era? Is the real question, and that's something we will see hopefully in the next 6 to 12 months. Grayscale and Bitwise should have been first to wrap stretch.
Look, I don't know how to answer the failed versus who cares. What I would say is that I would like to make sure that investors understand where yield comes from in all products, and that they understand the risks of these products. And that's what I've been trying to do with my own work, is just to make sure that retail investors especially are fully aware of the risks and the yield sources of the investments that they're making.
I'm going to go no answer on that one. Vault Curator race begins for asset managers.
True. Yes. Vault curation race has already begun.
Well, we've got some big ones too that are starting to brew. Solana will be the first to figure out the trusted private markets and SPVs.
Ooh, that's a tough one. I am going to say, I don't know, maybe, maybe. I think
okay. In the middle.
In the middle. I'm going to give you a wishy-washy answer on this one.
I'm kind of with you. I just don't know, but I think they got it. I'm going to go actually a little bit more toward yes.
Okay.
But it's a tough one. Which hits all-time highs first, ETH or Solana? What do you think? With all the things that are happening on Ethereum, you've got Glamsterdam coming out in the fall. Possibly we could get past this Iranian thing. Macro starts changing. Does Solana get the edge up, or does ETH get the edge up?
Again, Paul, you're making me choose between my children here a little bit. I'm going to say Ethereum in this case, mostly because it is the second largest asset after Bitcoin, and I think slightly more institutional capital will go to Ethereum first post Clarity.
Even I'll go opposite just because I should. But I will say this, you have to worry about the inflationary comparison, I think, because obviously Solana continuing to build up. To get to an all-time high, that would be something, so timing is very critical for that, because otherwise that percentage of inflation starts to increase over a longer period, which could happen. We could see all-time highs later this year. It could also see 27. Many people kind of pointed to 2027. When you look at the midterms and where Clarity is, you feel, where are you putting the Clarity odds right now, Zach, in a percentage, kind of like a poly market, the Zach poly market?
The Zach odds are at least 80% at this point. I feel pretty good about it. I think the 2 Democrat votes in the Senate Banking Committee were very important to signal that this can get bipartisan support on the Senate floor, which is the key hurdle.
Yeah, with also Brooke and Tillis for sure. Well, I think the concern right now is still those wild cards in the Senate that could come out and just end up messing up everything. And then I'm still worried about, what we're going to see in the midterms if we do get pressure and this doesn't get through in this particular cycle before midterms happen, because that could really spoil things for crypto, I think, down the road if Clarity does not hit right now while we have what do they call it? Strike while the iron is hot kind of situation for sure.
Exactly.
Zach, thanks for coming in today. We'd love to have you and all your candor around where these markets are heading, but appreciate you stopping in.
Always great to see you, Paul. Thank you.
If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.